So, Alicia, you want to kick us off or you want me to?
You go right ahead.
Okay. So, as Alicia said, for everyone that's listening online, thanks for dropping in and watching this on YouTube or Facebook Live. And make sure if you have the opportunity to make uh, the chance to come on live with us, so that you can participate and interact with all the folks on here and get some good networking, in addition to just tips and tricks on raising capital. Obviously, we're going to try to bring you guests at least a few times a month, but we don't always want to have guests. We want to make sure that we're giving everyone the opportunity to network and bring new investors into your CRM, your database, and or potentially help you find new deals or new partners. And today's going to be another one of those. And so it's just going to be, as long as my screen has only one screen on, I'm going to make it a free for all unless everyone wants to break out into smaller breakout rooms. If you do, we can do that. But I think that we would benefit from all of us hearing what each of us have to say and not having to repeat it in three different breakout rooms each time. And so I think that's what we'll do. So first off, uh, if you're new here, if this is your first time, please raise your hand or come off mute and introduce yourself to the group. So Dave, is this your first time? Dave Leon?
Yeah. Hey there. I was searching how to raise my hand, but anyways, yes, it is. So yeah, you and I spoke that one time, and thank you for that time on a Saturday. But to the group, Dave Leon here, and I've been investing in real estate since 2017. I own five single-family properties, four fourplexes, and a duplex. Since 2021 and 22, I got into multifamily syndications via an LP. I'm in five of those currently. And as of January, I've made, I guess, the next step and began raising capital. And I've had some very good success pulling from my pool of LinkedIn first degree connections. I've had very favorable returns. And, we're going through I'm running my own weekly webinars and sharing and showing what exactly I've done since 2017. I'm entirely self-taught. I did join a mentor group in 2020, and that really helped kickstart things to where I am today. So consider this like another group that I've joined, so I can go to the next level.
So Dave, two things. Number one, once you stop talking, you're able to concentrate on typing. Please drop your contact information in the chat and a link for people to sign up for your webinar.
Sure.
So that in addition to meeting you here, they can join you on your webinar, which is very good and targeted. And if you join his webinar, you'll have an opportunity to see how Dave is going about this process. And Dave is really doing things the right way. Him and I have been on a couple of calls, and I've been to one of his presentations and hope to have the chance to get to a couple of more. I know they're on Tuesday nights and Saturday mornings, if I remember right, Dave.
That is true. And since you and I spoke, I've opened it up to Monday through Friday and Saturday. And I'm getting more hits as a result. Go figure.
Fantastic. So one of the strategies that you and I had talked about, are you trying to consolidate them, or are you getting enough where it's actually worth your time to be on each day?
Yes and yes. I'm looking at who is attending, and I know who the people are, so that's half the battle, right? Probably 2/3 of the battle. And it gives me a good one-on-one time with that person, and I can really get down into, what's their concerns, what's their fears, what's their success criteria, and et cetera. But if I have kind of a batch of newbies, if you will, then I will do the consolidation and deliver the message once to many.
All right, fantastic. So if everyone's not connected with Dave on LinkedIn, make sure that you do that. And I would highly suggest that you guys get on the webinar just to see how Dave is handling this. It might be something you want to try to replicate. So,
Yeah, thank you.
Yep. So Brian, you have your hand raised, and by the way, if you don't see the reactions on the bottom of your screen, it might be because it's in the more section. And if you've got your chat window open or participants window open, a lot of times it won't show that reaction button unless you press more. So you can press more, or you can close those other windows, or you can do it the old-fashioned way and just hold your hand up, and we'll see you. But Brian, go ahead.
Hello, everybody. This is Brian Izad, and I'm located in East Bay. I'm an investor, and I started my company, investing company, a couple years ago. But and I have been LP limited partner for few multifamily properties, over 1,600 units. But right now, because I'm working also, I have another company, which is because I'm a software engineer as well. My focus is on both those two areas. I'm basically working on my own company as well as the other company, investment company, which is named, Brintia Investment Group. I would like to be a general partner, and I'm working toward having enough skills to be a general partner. Fundraising is one of those skills that definitely every single general partner should have. And that's why when I saw the email to attend this meeting, I attended this meeting, and I'm happy to be with you.
I appreciate that, Brian. So I will offer one suggestion. You might be bashful, but when at least when you're speaking to the group, you will make a more impactful impression if you're showing your camera, if you're turning your camera on.
Right.
And I mean, look at me. I'm dressed in a t-shirt. I'm not even going to say what's below the picture. So
Yeah.
you know, it's you just after a few times,
Kim,
we're just a bunch of guys here then and gals that we're getting to know each other. You don't need to be fancy, you don't need to be polished. You can see Steve is driving, so even though he can't actually participate much, he's still on camera. And so it's always, and this is something I'll say to all of you guys, when you're actually speaking, it's always best if you can show your face. Now, if you're eating lunch at the same time and talking, sometimes I'll do the same thing and stay off camera just because I don't want to see people having to have my food all over my face. But other than that, it is useful to be on camera. It gives people a sense that they can get to know you a little bit better. And if you've done this and it's the same group of friends and you've been here 1,000 times, and it's all the same people that and they know you, then it's not as important on the impression, but always better for sure. So, but Brian, you said you're a software engineer and your company is a software engineer company, correct?
I'm a consultant for developing or helping for developing software for banks and mortgage companies, and using different kinds of languages like Python or C#. Yeah, that's correct.
Okay. All right. Yeah. And by the way, I would like your microphone is very muffled. So I don't know if you're using your laptop, but if you are,
I am.
okay. Yeah. See, now suddenly, I don't know what happened, but you're much clearer right now. So.
The reason was because I have this basically AC next to me. I just turned it off. Thanks for letting me know.
Okay. All right.
Yeah.
No problem, man. No problem at all. So how long have you been raising capital, Brian? That's your other business, is kind of, starting off as a private equity firm raising capital for deals. How long?
Right. Yeah. I'm still learning. I really haven't done that much as far as raising capital. I'm in the process of learning all the tips and tricks. So if you're, I have been in multifamily for at least 4 or 5 years, but just as limited partner,
as
never,
an LP?
yeah, never I raised any capital or anything like that.
Okay, so I'm not looking at your LinkedIn, so I don't know your history. What is your work history, your W-2 history? Have you always had your own business? Have you been consulting for 15 years, or did you work for some big firms?
No, in fact, I worked on startup business. My most of my life, I have worked as W-2, and what I have learned so far, uh, they I learned through companies that we started, or not me. I mean, people started, but I have been lucky to be part of the first few employees. And then after a while, the company, I mean, for one of the companies I work for in Bay Area, I started working for that company for over in 2020, I'm sorry, in 2003, and I left in 2020, over 17 years. By the time I left, they had over 3,000 employees. I was employee number 47.
What company was that?
Ellie Mae. It's called,
Okay.
now it's called ICE, but the original name was Ellie Mae, and we developed software for banks and mortgage companies.
And
And then after that, I joined another company, the same line of business, basically. And then about a month ago, I started my own company to be as a consultant. And it's good because now I have two banks I'm working with as a consultant.
so are you familiar with the investment club model or an investment club meetup where you will host and build out an authority platform by hosting a meetup?
No, I'm not.
Okay, so there's a ton of them. I don't know if you attend meetups in the Bay Area. There's absolutely, probably on any given day, at least 3 of them going on just in real estate.
Oh,
And
okay.
it's a great way for you to interact with other investors and to meet a lot of investors. And if you're very strategic, each time you go, never talk to anyone with everyone needs to know, and you need to be very forward about this, is that, look, I'm not here to make friends. First, I'm here to get your name, your phone number, and your email. If we can both agree on that, then let's exchange that first, and then let's try to make the friendship. Because the most important thing to you there, it's important to build relationships, but the first thing you need out of a relationship is a name, an email address, and a phone number. It's the very first thing. So don't wait until you've had a 30-minute conversation with them and then you forget to ask, or you're embarrassed to ask, or they suddenly move on to the next conversation, or somebody else comes into the conversation. And if that happens to you, by the way, immediately stop the conversation and make sure that if it's me and you in a conversation, and we've already established from the beginning what you want is my name and what I want is your name, and then Alicia comes into the conversation, I don't care what we're talking about, we immediately stop and we give Alicia our name and our email and our phone number, and we get that back from her. Then we can pick the conversation back up. But always remember what your priority is. And most of us don't do that. In networking settings, it amazes me how many people don't ask for my email, my name, my phone number. It just amazes me. So being in the Bay Area, the other thing is if you work for a big company, whether you're an engineer, let's say you're an automotive engineer, electrical engineer, you work at General Motors. If that's your situation, that's your best avatar to go after because you already know everybody in the company and they know you. So you've got a real big head start. Start an investment club or an investment meetup inside the company. And once a month, once a week, ever how often you want to do it, you hold an investment club meeting and you tell people about what your hobby is. Because if you're still a W-2, some of them in the beginning can be a little sensitive to you having, if they think you're doing 2 jobs. So you always, it's a hobby. This is, it's like, hey, let's all get together and talk about what stocks we want to put in our 401k. Okay. That
Sure.
kind of meetup. It's an absolutely phenomenal way for you to build a huge list of trusted people and already have access. Likely, if you've been at the company for a while, you have a company directory. So you already have their name, you already have, potentially an email and a phone number, but a lot of company directories only list company emails and company phone numbers. You don't want those. You want only personal emails and personal cell phone numbers. But some companies list that information. I think Dave and I had talked about that. If I remember, Dave, was it you that told me, said, yeah, my company has that, and was able to access
Yep.
all of that information.
Yeah,
So,
all 130,000 employees.
so Dave has 130,000 new friends and already has all their information. That's a list. Guys, if you have 100 good names in your database that are investing with you, whether they've invested with you once or 10 times, you can make a living and have no other job just with 100 good investors that have the ability to invest and have invested before. You only need 100. So if you've got 1,000, you're going to kill it. If you got 130,000, you're going to need to hire some VAs and start with, hey, I'm Dave's assistant and Dave wants to have a conversation with you, but can we get you on a webinar and have at least 10 of you each night? So if you're still in contact, Brian, with the folks that you had worked with in the past,
Yes.
then even if you're not working there anymore, if you still have a good relationship, I would go in there and offer to have an investment club meeting once a month. And
Okay.
you might start off and have one person show up the first night, but it will spread. Word will spread quickly, and you'll start to get more and more people. And so that's a great way for you to build a list with people that already know you. You don't have to spend 2 or 3 months and hours and hours of conversations getting to know them and them getting to know you. So now all you have to concentrate on is educating them on the space and seeing if they're interested in moving forward. So huge way to do that. And you can also have multiple meetups. You can have one for corporate people. If you want to create one, as an independent standalone meetup in a city, just to say, hey, I want to bring attention to myself. We encourage our GOB members to start affiliate meetups, GOB network or GOB network meetup in San Francisco, GOB network meetup. Alicia runs one in Arizona, in Phoenix. We have one here in Chicago. We've got one in Atlanta. Although if anybody here is from Atlanta, our Atlanta chapter needs some help, needs somebody to kind of take over, I believe. But yeah, those are great ways for you to build thought leadership. More importantly, I think one of the best ways to learn, because you can invite and interview people who are in the industry already successful at it. And that's a lot better and more intense, and you'll get more out of it. It's like doing a podcast, same thing. So, on our YouTube channel, we technically, this will be turned into a podcast. And if I were interviewing you for the first time, and just you and me talking, I'd turn that into a podcast. Everything that you do that you have a recording of should become a podcast, in a webinar. So, and the great thing about, I don't know if Zoom does it now. If Zoom has a transcript, I think they may. But if you're recording most calls, either have an assistant in the room with you, like an Otter or a Fathom or one of the other AI bots that will transcribe. So now you have a recording and also a transcription that you can turn into a blog, or you can take little pieces out and turn them into social media post. So, but make sure, Brian, that you drop your information in the chat so that everyone and sign up for Dave's class. And I will also say to you, look, we look to educate everyone to be able to GP a deal, be able to sponsor your own deal. Here, this call, we really focus on capital raising, but we have a Tuesday morning call that focuses on underwriting. But the network in and of itself is, we want to train you to know everything that a sponsor knows, everything that a KP knows, everything that a GP knows, not because you necessarily need to be those things, but so that you can be a better LP. And if you don't want a lot more work on your plate, I'd really think very hard about how you want to be a GP. So as someone raising capital and being private equity, you can come into a deal either on the GP side or the LP side, either one. If you come in on the GP side, you're going to have to do a lot more work. If you come in on the LP side, as you know, the work is very limited to what you have to do. So.
Yeah, the downside of being LP also is there is no basically no control on anything, because just the GPs, they control everything, and we are in the favor of having a good GPs, because some GPs, they are not good, they don't never communicate with the LPs.
Absolutely.
And since I have been LP for a long time, at least few years, I know exactly what LPs they want to have in order to,
and what they're not getting from 99% of the sponsors.
Exactly.
Yeah. I couldn't agree with you more. That's why not only us, but everyone always says the most important thing about investing as an LP is know the sponsor and have a clear understanding of who they are, what they do, and how they perform. And if you don't, even if the deal is a great deal, it's the perfect deal, it's right next door to you, you drive by it every single day, you love it, you would live there. You know, if you needed an apartment to rent, you'd live there all day long. So everything looks great. Great metrics, you know, the new Tesla plant's going in next door, you know, just everything is great, but you don't know the sponsor, you probably are better off waiting and or try to get as many references as you can to learn as much about that sponsor as you can, as quickly as you can. You know, interact with them on social media, interact with them on meetups, webinars, you know, you know, dig a little deeper, because you're right. A lot of them do not interact with their investors the way the investors would like to be interacted with. But there's, you know, that can be mitigated by investing with the right sponsors as an LP. And it doesn't, you know, I don't want to have to make the decisions. I'd prefer not to. I'd prefer somebody else do all that, but do it well. You know, I already work way too many hours as it is, you know, so it's part of the vetting process and due diligence. But if you want to be a GP, go for it, you know, be a GP. But I'd also advise you, if it's your first GP, either come in strictly on the capital side, because, you know, that can be a strength because of your network, and make sure that you are in all of the calls. Make sure before you join a team that you have an understanding of how often you're going to have calls, you know, what level of access you're going to have, you know, all those things that you talk about you'd like to have. Make sure that you clearly define them, you know, before you join the team, and get it in writing if at all possible, and that way you can hold their feet to the fire. So, but
thank you.
If you, I'll also say, start small. I know everyone's preaching, you know, get a 100-unit deal right out of the gate. It's just as much work, just as much time. I'm telling you, you're going to make a ton of mistakes, a ton of mistakes. And when you make them, you don't want to make it on a 100-unit deal. You want to make it on a small deal where you have few investors. So if everything goes south, you don't piss off your entire database. You only piss off a few. Yeah. And if you do a 100-unit deal, I've got 3 friends that have over 2,000 units, minimum 2,000 units, that have all gone bankrupt this year. And each of them had over 100 investors easily that lost all their money. So they will probably never do another deal in this business. And they're all good guys. They just listen to everyone. You know, I'm going to go big, I'm going all in, and you know, I'm sorry, I don't agree with that at all. As I know how many mistakes you make. Look, I've been in this business for 40 years, and I still make a ton of mistakes every single day. Just ask Alicia, she'll tell you. I make a ton of mistakes every single day.
Hey, we're not
And
perfect.
no,
None of
and
us
never
are.
will be.
I'll even give you an example too. We have underwriters and we have partners that are very conservative, and in their conservative underwriting, they account for certain things to come out of the budget. Thank goodness they underwrite that way, because anything can happen, right? It's like the Chicken Little moment. The sky is falling, sky is falling. As you go into your investment and you're operating the investment, things come up: foundation issues, window issues, landscaping issues, plumbing issues. If it's not a new building, anything older than 80s, you're going to have some type of plumbing issue. But who expects a back to back to back to back plumbing issue? You expect maybe one or two. You're going to budget for that, but you don't budget for three or four of them, right? And then you can also budget for tenants leaving. We typically do what, a year, and you raise capital for the whole year of operating expenses. And then you also raise for capital expense. But what if your inspector misses that there's a huge portion of the roof that needs to be replaced? That's a huge expense, right? And so those types of things the operators have to come up and have some type of game plan on. And sometimes, even though you're conservative, those expenses are allocated to those, and you still find yourself in a tough situation. So, it, like Jim said, you got to have some really good relationships. As long as those operators are communicating, then you have a heads up, you have that dialogue. But if you all are investing as LPs into certain investments, start that dialogue. Don't expect that you can just sit around and let them do their thing. Ask them questions, be involved in advance of you giving your funds, so that you can see, or try to see, if they're responsive in advance, and how they flow and how they make decisions. And maybe that'll help to build your confidence.
I agree.
Marcus,
That's
your
good.
hand-
Hey, Jim, this question is for you, buddy. The two examples you just gave us, without any names, anything, but can you tell us exactly the ones that had the 2,000 plus units, what happened in their case and how did they end up going bankrupt? Can you expound on that a little bit more, please? You're muted.
So the easiest answer to give is they went too far too fast. They grew too fast and didn't have the infrastructure in place to do that, and did not raise enough capital reserves to get them through the hard times. And let me dispel something here right away. I've seen thousands of underwritings. I've never seen a conservative underwriting, not once in my life. It's a unicorn. It doesn't exist, because no matter how conservative you think you are, 9 times out of 10, your numbers will never match up to reality. And you're going to have to hustle and pivot and figure out, how do I fix this? Maybe I had underwritten my rents to be at 1,000 and I've got to push them to 1,100. I underwrote property management at 4%, and it's the real numbers coming in closer to 8%, because there's a lot that goes into that. Most people, that's one of the biggest areas that people make a mistake in their underwriting. If you're between the property manager, the leasing agent, office fees, all of those things that go into that category, if it's not 15 or more likely 20%, okay, then you're not underwriting conservatively. And I've never seen anybody do it at 20%. And now people are underwriting because of this economy. In order to make a deal look good, people are underwriting with, what we used to say, 10 bips per year need to be added to your cap rate, at exit. And I'm seeing almost no one do that anymore, especially the bigger players. So that's why it's so important to get a good operator. Is the underwriting, you can make the underwriting look any way you want it to look. And honestly, if you haven't spent several months on the deal itself, it can be very difficult for you to really uncover whether or not you think there's some missing links in that underwriting. Yeah, there's always going to be 5 or 6 key metrics that you want to look at, but I guarantee you, it's not too many people come in and it matches the actual budget year 1, 2, 3, 4, and 5 the way you laid it out. So
Thanks, Jim.
So
I
Jim,
don't remember who had their hand up.
Rhonda was first, then Edwin and Moses. and
Okay,
Steve.
fantastic.
Good morning to you all, or good afternoon. I'm so grateful to hear this share from the gentleman. Let's see, what's your name? I can see your name. Oh, Brian. I'm happy to hear that, although I wasn't here for all of it, but just that part alone just really resonate with me, because Alicia will tell you, I am so one who is always concerned about our investors. I mean, I'm looking about how do we talk to them? What do we tell them that where we are now? We need more meetings. We need to let them know. We need to get the word out. So we do reports every month. We just had a meeting on Friday, and it was spectacular in the sense that we're not tooting our horns. It was the feedback that we received from the investors of how well organized, the numbers, the work they saw. They said, you did hard work. You are doing the work. And so what we found is that I specifically, because I knew some of the investors who, I brought in, I would think, they call me and they said, what's going on? When do we get our draw? And I'm like, hey, we don't have our entitlements, but we're getting there. And that couple was so gracious and so kind. It was like they've already invested the maximum amount, and then they're asking again, can they invest, again? So my mind was like, thank you, Lord, because I had actually prayed for how do we, continue to keep our investors informed. And not only that, because some of them are first-time investors, specifically in large amounts, we want to make sure that they're comfortable. So I even asked Alicia about concessions, because that's just me from a personal standpoint, who I am. And so she said there's some ideas, because we want, again, keep our investors informed. We want them to know. And when they saw that timeline, when they saw the numbers, oh my goodness, we didn't hold back nothing. Questions, it was silent night, because everything was already put out there, just about, everything that they could have imagined. Because we were thinking about, when we organized our session, we said this: what are the questions they're going to ask? Let's answer their questions with our presentation. And that's exactly what we did. And then we have another one. My daughter was so excited, she went and started getting people. So right now we have a 2-day, on Monday, she said, I got some people. We having a meeting tonight because of that energy. And then I have got on, I started getting on the horn. I started getting on the Texas. 3 confirmed. We calling it King's Night, King's Investors Night. This is the men coming in, the kings. And so we are excited in the sense of how things are laying out for us. I mean, hey, we still got some way to go. But I tell you one thing, the energy, the excitement, the zeal, we see it. Another thing happened, I don't want to take up your time, but this is what happened. I've been doing veterans housing for 14 years. We're developing a project on that. That's on the 501c3 side. But at the same time, I said, well, how do we incorporate veterans in this project? Because that's my life. That is my passion, and everything I do has to have in veterans. And so I got a plan was already laid out. He laid it out for me. And we're going to share it tonight, because we're going to have some veterans on there. how we're going to honor our veterans in this project, and how their families will be, we believe, all of them will be happy and satisfied with where we're going in our direction. I just thought I would share that with you. Thank you for allowing me to have this.
So before I move on to Edwin, the same thing I said earlier about joining a meetup or a webinar. If any of you are doing that, or if any of you are not doing that, I would participate in as many of those as you can to get an idea of what other people are doing and how they're doing it. So it's very helpful. And it also helps support your community by doing that. Edwin? First off, it looks like you're home. Are you in Colombia or are you home?
No, I'm at home right now. My wife and I'll be heading down to Colombia on Friday. So next week you might see some Micos jumping around in the trees behind me.
All right. All right. We're looking forward to it.
Yeah, there you go. Brian had mentioned this, and even more so, let's see, the gentleman that had asked about what those deals that went south are. And I just from a market perspective, what's happening. Obviously, we all know that the interest rates have risen, and the issues that causes current GPs and current sponsors in exiting. And if you as a aspiring GP are not fully aware of the implications of the interest rates and the economy and how that affects, then I would highly recommend that you not step into the GP position. If you do not understand the market influences that affect and why GPs or sponsors cannot get refinanced, or why they can't even sell properties right now, then it's probably not in your best interest to step into GP, because the market affects so much of a syndication and selling or even refinancing a commercial asset or multifamily. But yeah, speaking to that, Jim, the 2000, there was a gentleman that I met on another mastermind, and he's personally invested in 15 syndications, 3,000 doors. Not one of them are performing right now. And so, and we're seeing, if you all are not paying attention to what's happening across the United States, and I'll say across because even in Florida, we have some syndications or large commercial office is being hit really hard right now. You can see that all over. If you follow The Real Deal on LinkedIn, they put out some really good, solid information, but multifamily is right tailing office. It's not really being put out there as much, but it is definitely happening. And I would say that one of the things that is an LP for any of the GPs here that are raising LP capital, or if you have been an LP, like Brian, you mentioned you're an LP. As an LP, Brian, you understand that it's almost near impossible to underwrite the deal because there's so much information that the GP has that, well, they may not disclose all the information because, quite frankly, they're trying to raise capital. And if they disclose that, hey, the whole backside of the building is rot infested and termite infested, nobody's going to invest, right? So there's a lot of stuff that the GPs are going to keep hidden. And some of it's not necessarily that they're trying to be deceitful. They just know that, hey, some of these things are going to scare people that are not in the industry, and it's not that big of a deal, so it doesn't need to be disclosed. And I understand that. However, as an LP, you need to train your LPs as GPs. And if you are an LP looking to invest in a GP, what you're actually underwriting is the GP. Being able to adequately underwrite that GP to such a degree that the GP is supposed to be underwriting that asset. And one of the ways that I tell my LPs to underwrite me is, number one, I want to see all the deals that you've not, like you say that, hey, we looked at hundreds of deals. I want to see all those deals that you've underwritten. And then please explain to me why you did not invest in those, because a lot of that's marketing, right? I'm not saying that GPs do not have the capacity to underwrite hundreds of deals every year, but there's even ones that they come across their desk and they're immediately like, nope. Okay, well, why didn't you invest that one? Well, that's in a market that we don't invest in. We're not confident in it. Okay, excellent. But if somebody's saying, hey, we underwrite all these deals, and well, then I want to see the list of the deals that you've done and then the reasons why you didn't invest. And if a GP says, well, that's a lot of information, well, you should be keeping track of that information. As a GP, that's something that would be behoove us as LPs to know that you're actually doing that. Being able to underwrite the GP is really important. And for everyone, especially as GPs, you need to train your LPs how to underwrite you so that they can go, therefore, and be great LPs for other GPs, right? And they're not putting their capital at risk. So that's all.
Great points, Edwin. And I will expound for Marcus and everyone else a little bit more. Some of the things that are getting people in trouble, as Edwin pointed out, the interest rate changes, where most people are way too positive about, oh, interest rates couldn't rise that high. You know, when we're getting loans at 2.9%, there's no way they're going to go to 7. You know, nobody would win a deal if you underwrote it at 7.
Hey, Jim, I'm sorry to interrupt you, but I would say that if your GPs are not underwriting, so I think right now the Fed rate's still at around 5.5, 5.65. Everybody's expecting a rate cut. I'm telling you right now, I'm banking all of my funds investments for the rest of the year, as well as the crypto fund that I will put all of that on the line right now. Not only will we not see a rate cut before the end of Q4 2024, we're going to see a rate increase. Not only one rate increase, I think next year, 2025, we're probably going to be upwards of the Fed rate closer to 7% on the low end, maybe 6.75, if not higher than 7%. I think a lot of GPs need to be prepared, and you need to be underwriting your deals. Can your deal survive with high single digit, if not low double digit interest rates? If it doesn't, it's probably not a good deal. And what that means for most GPs is that most deals are not going to pass underwriting. But if you want to keep your LP safe, that is the approach that you need to have for the next, I would say, 2 years minimum, up to 5 years.
Yeah,
Hey,
I
Edwin,
couldn't agree more. So
Edwin, sorry to cut people who already raised their hands, but just going by what you're saying, how are you underwriting your properties if it's not a straight, how can I say this? Oh, I just lost that word. Do you also underwrite in a waterfall model? Let's put it that way, too.
So, JR, I will let you know that I'm actually probably one of the anomalies in this group. I'm not a GP in a syndication. I am specifically on the debt side. I believe that being on the debt side actually mitigates a lot of risk. And for LPs that are looking for capital preservation strategies, that's sort of where I'm focused on. And because I believe in investing in the bank, I believe in controlling assets, not owning assets. We get to shift liability and responsibility to someone else. So most of my underwriting is all on the debt side. That being said, we have not underwritten a lot of commercial or multifamily loans because I'm not keen on making those loans right now. We're not looking at making commercial or multifamily loans, first position loans throughout the Southeast United States until the beginning of 2025. Going all the way into 2026. So that's again, so I will take a step back from that. And I'm not the expert on the GP of syndications. What I do look for is to partner with GPs that have very conservative. You can't be the most conservative, like Jim pointed out, but I want to find GPs that are being ultra conservative, and really the deal that they have is an absolute steal of a deal. And that means they didn't get that on the market. Like, the deal's not listed on the public. They got it through a pocket listing, or they personally marketed for that deal. If you're finding GPs that are not going out there knocking doors, the deal is listed on, was it LoopNet or any type of agent that has that deal listed, I can guarantee you, and we're seeing this in the single family space, if it's listed on the MLS, it's not a deal. I don't care what somebody spends it. I don't care how they try to work the numbers. It's not a deal, at least for the next 2 years minimum. So if the GP is, and I'm sorry if I'm stepping on anybody's toes, but this is exactly how I would underwrite a deal. If we're going to do a debt or even a co-GP position with a GP, I want to know that they got that deal off market, and we're looking at 50% loan to value on the purchase of the current as is. That's the maximum. I want to see 40 to 30% on the purchase. And most of y'all are scratching like, that's impossible. That's not. Oh no, it's going to be happening, and it's happening very quickly, very rapidly. We're seeing the shift already happen. So if you're not trained up on how to find those deals off market, direct to owner, the deals are not going to pass for a lot of the debt side. And you're going to start seeing banks and a lot of the debt providers for commercial multifamily claw back their offerings, and they're going to become what most GPs would consider astronomical, and they're like extreme conservative. Like there's no way I can get a deal like that. So yeah, JR, that's what I would say to that.
Yeah, because I'm already underwriting mine between 35 to maybe sometimes 45%. But with 45% is just too astronomical to be way too conservative in that position. So to me, between 35 and 40, that's kind of where my underwriting would be. But yeah, you're right. It is kind of something out there. And when the one thing that really struck me the most is when you said that, there's going to be another percentage or so going up into Q1 of 2025. And I think you're in the ballpark of that, because unless, and this might get into the political realm, but unless the orange guy gets elected, we might see pumpkin guy, let's just put it that way. We probably, yeah, you're right. It might seem to where we might get another rate hike if this guy still
No,
sleeps.
JR, I'm gonna interject here, and I'm gonna put my foot out there for stomping. So all of you here, you can hold me accountable to this, regardless of who wins the election. The Fed is in a position right now. The Fed has become politicized. So the Fed they're getting pressure on all sides not to raise rates, and they're going to do their best not to raise the rates. They're going to continue to kick this can down the path. Whoever wins the election, whether President Biden gets reelected or whether former President Trump gets elected, or some other anomaly happens and we have a third runner-up that gets elected, no matter what, the rates will rise regardless of who enters office. And what that's going to do is it's going to put pressure on the next president of, hey, look at the economy. This is your fault now. That's just the way it's going to go. We understand politics in America. At the end of the day, my very firm belief is that we will see a rate rise. We will not see a rate cut. I think the market has clawed back from expectation of 5 rate cuts this year down to 2. Come summer, they're going to realize that no, there's no more rate cuts. You're going to continue to see the stock market be affected by this. The crypto markets are affected by this. We're tracking that. We day trade in my crypto fund. We're tracking that already. The markets are overly optimistic of what the Fed is saying. But if you read between the lines of Jerome Powell, and if you're looking at the market, they cannot sustain any more rate cuts. Our economy can't. We have to actually increase to bring down inflation, as well as, quite frankly, bring down property values. That's just the way that it is. And the property values have definitely skyrocketed. I think that regardless of who gets elected, we're going to see rate cuts, at least one more before the end of the year. And 2025, it's game on. It could get really ugly in 2025.
All right, we're running short on time, so let's move on. Moses?
Hey, Jim, thanks. I think when you gave the scenario of the 2,000 doors that kind of fail, I think it's only fair. I think Edwin took 90% of my points there, but now I understand where he was coming from because he has the financial background to it. I think, Jim, no matter how experienced you were, you could put a 1-year reserve and nobody expected to blow that out that quickly when the changes occur. So I think to be on the fair side to some really good GPs that I know, they end up struggling till the tail end until now, trying to get pref funds, trying to keep the deal going. And it's like, Edwin said, I don't think rates going to come down this year. It's going to keep punishing. And they were banking that rates going to come down this year, hoping they can hold on. But I think we're going to see the great fall. And Neil Bauer made a really good presentation last night that showed out of all of the asset class, the banks are after the multifamily. That's the one that they want back. All the other class, they're working out deals, not the multifamily, because they understand how it works. And I think, Jim, one of the things that I've learned over the 30 years doing this, you have to know the lender that you're putting your deal with. Because if you go back and look last year, it's the lenders who gouged on their escrow that put a lot of GPs in a hard spot. What that meant was if you had escrow for your taxes, your insurance, and for your cap rate, if it was a value add deal, you had lenders who went and doubled on those escrow deposits. And that's what killed the reserve really quickly, because the lender was like, well, it's me. We know it's going to cost you 3 times as much to buy a new rate cap. And that's what put a lot of guys in a surprise mode. But some of those are the moving thing. I just wanted to touch on that so people understood it was more than just a guy who just didn't maybe know all the perfect pieces of underwriting. It also has to do a lot with the lending side and knowing your lender.
Yeah, it's to your point, Moses, it's very, very hard to convince, and in a rate environment of 3%, it's extremely hard to convince people it could go to 7. And me, I'm old enough to remember when it was 18. And I'm also old enough to remember what the historical rate is, over 50 years. How many years was it at 3? How many years was it at 7? How many years was it at 12? And so it's easier when you do that. But there's so many people in this business now that are under 50 and they've never seen rates above 7%. It's inconceivable. The old saying, you don't know what you don't know. You cannot conceive of this happening. And when it does happen, most people are not in a position to weather it. And there's so many deals that were done without a rate cap. And now that last deal that just failed, it's a $10 million raise just for the rate cap. That doesn't include anything else. It's going to cost $10 million just to get a rate cap. And the lender says, if you don't put a rate cap in, we're not going to do the deal. So you're put into your point, Moses. A lot of these lenders right now, I think, are being unreasonable. They're going to wind up owning a lot of real estate. So, but Steve, you had your hand up next.
I have been loving the conversation and how deep and terrifying some of this is getting. At the same time, I'm in the note space. So what Edwin is saying is making me go, okay, so that actually means there's going to be more of an advantage for us. There's going to be more to purchase as we keep going, which, I mean, that's one of those, where the shark eats when the water is bloody, or when the water is red. That's a brutal way to look at it, but we're already seeing it with the single family homes that we look at. We aren't doing it with the multifamily, but I mean, I saw 2 weeks ago 8 apartment buildings projects that are all defaulted, and they start at 16 million for a first position defaulted note. And these are, I have to assume these are syndicated deals. I'm hearing more and more of these people who jumped into these partnerships as Ps, and they haven't gotten. Now their principal is at risk. They weren't getting their returns, they weren't getting payouts yet, and now the principal is actually at risk, and they're getting concerned. So, Edwin, I'm curious about I want to follow up with you about why you think the rates are going to go up more. I don't think they're going to go down anytime soon. But I do think there's going to be more of a feeding frenzy for the right kind of people who are playing a different strategy than the typical syndicators out there in the coming 18 months, 2 years, whatever it might be.
So maybe we can pick this conversation up and continue it next week. I don't know what our guest list looks like, but before everyone has to leave, so I want to be respectful of your time, but if you're able to stay on a few more minutes, I do know, is it Sham?
Yes. Who are you?
So do we know each other? Is this your first time?
No. I came on maybe like a couple of months ago or so. And we spoke about me co-hosting Central Jersey RIA, and you knew Cody Davis and then Christian Osgood, and I was one of his students. So yeah, we just closed on a student housing, and so now I'm at a total of 10 doors, and we raised money for everything. So
congratulations, man.
Yeah, I took some of your advice, and it went a long way.
Fantastic. Love to hear that. So I know, JR, you had another comment, but we are running really short here on time. Want to be respectful for everyone. Just want to say, look, if you are enjoying this, if you're getting any value from it, make sure and make a comment on our social media. bring a friend with you, tell somebody else about it. And the more people we get in here, the more value we can add for each other. And make sure that you're taking the opportunity to follow each and every one of the people that are on here, join their webinars, add some feedback, and learn from that. Even if you're not investing in a deal, being in the room and listening and adding one more person, one more chair in the webinar and asking some intelligent questions, not only helps you to grow, but it also helps the other people on the call. So, let's help each other by being interactive with each other. And with that, I will close up. Anything, Alicia, you want to say before we sign off?
Just as Jim said, thank you, everyone. I'll leave you with this. Accept who you are in this moment, but acknowledge who you want to become.
Exactly.
And we'll see
Thank
you next week.
Yep. And
Thank you, Jim.
and if you guys have any comments about a particular format or guest that you liked, that you didn't get to hear enough from, or somebody that you'd like for us to interview, or if you're like, look, we really love this networking, even more than that, just give us feedback. We want this to be valuable for you. This is not about us. It's about bringing value to the group. So let's do whatever we can to increase that value proposition. So thank you very much. Really appreciate it. We look forward to seeing you Tuesday morning. Look forward to seeing you here next Wednesday. And Alicia, remind me, because I'm old and feeble, if you're one of the ladies, look forward to seeing you.
The second Wednesday of every month.
There you go.
Thank you,
Thank you
Jim.
very much, guys. Talk to you soon.
Bye-bye.